The PGFN Ordinance 2044, which came into effect on March 1st, 2025, cites the Susep Circular 691, which came into effect last year. The notes brought by the new Susep certificates may prevent the presentation and renewal of guarantees. Come and learn about the notes brought by the new circular in detail with the director of Susep. Carlos Roberto Alves de Queiroz has been the director of Susep since 2022, responsible for prudential supervision and reinsurance supervision. Graduated from the University of São Paulo, USP. In economics and law, he has been a federal public servant for over 21 years. He has been working at Susep since 2010 and was the interim superintendent of the audit from January to April 2023. He represents Susep in COREMEC, the Committee for the Regulation and Supervision of Financial, Capital, Insurance, Pension, and Capitalization Markets. And in the National Strategy to Combat Corruption and Money Laundering, ENCCLA. Carlos, thank you for being here at the Shirt Academy. Our goal today is to speak to companies in a very straightforward manner about each of the points brought by the new Susep circular. And now you have the opportunity to scan the QR code, the manual provided by Susep, which explains each of the points in detail. The material turned out really well and is available on the screen. Carlos, let's go. So straight to the first point. Why is adjusted net worth compared to the minimum required capital?
Let's go back to talking a little about that balance sheet perspective. I think it's important before getting to the capital, the insurer, the business of the insurer is to guarantee risk, to ensure the legitimate interest of the insured. So for that, it needs to initially establish technical provisions. Even before recognizing revenue on the balance sheet, it has to recognize an obligation, it has to acknowledge it there. It's an estimate of loss, it has to recognize a provision. According to the actuarial technical note, according to the actuarial calculations that it needs to make, then its technical provisions. So there are the premium provisions and the claims provisions. This needs to be recognized on the balance sheet. On the other hand, it needs to have assets to meet these obligations, to cover these provisions. And these assets are the premiums to be received or other assets that it needs to have initially to be able to enter the insurance business. So it's important to have this balance sheet perspective. The insurer must have provisions and it needs to have assets. If we were in a perfect world without additional risks and the actuarial calculation was perfect, this could be enough to ensure the operation of an insurer, but that's not quite the case. The insurer, when it establishes the technical provision, it is subject to underwriting risk. When it accepts the business, it does a pricing and there is a significant risk that this pricing may not be correct, either upwards or downwards, and it needs to establish additional capital to address this risk. The same applies to the asset side. It is subject to credit risk, the risk of not receiving that amount from its counterparty. So it needs to recognize this risk in the balance sheet as well. Insurers are also subject to market risk, conjunctural risk, economic risk, interest rate risk, exchange rate risk, depending on the business, and inflation risk. This market risk also needs to be recognized in the balance sheet. And the operation itself, the functioning input of the insurer, also brings risks. I think all companies are like this, but it is especially important in an insurance company. So, various losses that are not measurable, or that are not calculable, or that do not relate to these other risks I mentioned, also need to be recognized in the balance sheet. So the insurer, going back to this balance sheet perspective, needs to have sufficient assets to cover its provisions and to cover these risks. These risks are what we call risk capitals. So based on methodologies that are standardized by the CNSP, based on studies conducted by Susep, the insurer, depending on the business it operates in, depending on the branch, depending on the asset it holds, depending on its operation, it needs to establish capitals, and the larger the operation of an insurer, the larger. This capital will be, the greater the need for capital will be, the larger this minimum required capital will be. So When the certificate regulation, Circular 691, states that an insurer will have a note when the adjusted net equity is lower than the minimum required capital, it precisely brings transparency to the interested party, to the citizen, to society, that the insurer does not have sufficient assets to guarantee all right of all those capitals that represent the risk of that business. So it is a risky situation, very much so, although it is not, let's say, a situation of immediate insolvency, even if such an event occurs, but it is important that the insurer always maintains, and Susep conducts a monthly check on this, always maintains adjusted net worth, that is high quality assets, which would be the accounting equity minus some assets that do not have good quality for solvency purposes, or that do not have good liquidity, or eventually deducted according to its operation, according to some economic adjustments that can be added or deducted. So it needs to have adjusted net worth, which is representative of high quality assets for solvency purposes to cover the risk. So this is the main solvency indicator worldwide. So the insurer, when it is solvent, it has adjusted net worth, it has high quality assets exceeding the risk capitals, exceeding the minimum required capital, which is the sum of these capital portions, of all these four risks that I mentioned.
Wonderful. So in summary, the insurer takes on risks and it creates technical provisions in its liabilities. To guarantee these technical provisions, it creates the guaranteeing assets in its assets, and in a perfect world, this would be sufficient, but the insurer is inherently subject to risks that may or may not materialize. These risks are generally classified into four groups. Underwriting risk, which is related to the acceptance of the business. Credit risk is related, for example, to the receipt of premiums for the insurance it has underwritten, and also the receipt of indemnities from reinsurers. Market risk, inherent to variations in exchange rates, interest rates, inflation, and other factors that can influence the insurer's operation, and operational risks, factors that may arise from the operation and influence the solvency of the insurer. These risks are quantified through pre-established methodologies in line with international regulatory bodies internationally, and ensure that if these risks materialize, the equity should cover these risks. So if the risks materialize, the equity should cover them. Therefore, the equity is reviewed for adjustment where some qualities are disregarded because they would not have sufficient liquidity to cover the materialization of this risk, etc. And then the minimum required capital is compared, which is the sum of these risks. It is without the adjusted equity. Wonderful. And this is the first item of the report that the certificates present. And the information, both from the PLA and the minimum required capital, is available on the Susep website as well. So that periodically it is possible for the market to follow these numbers, to know what the ratio is, what the current relationship is of each insurer. If you are interested in accessing this material, please copy the QR code and request it. We provide a monthly evaluation of the comparison between the minimum required capital and the adjusted equity. Let's move on to the second item. The second item refers to, we have already mentioned it, but now with a little more depth. The second item refers to the relationship between the guaranteeing assets and the technical provisions. So what is in the assets and what is in the liabilities?
This is an additional requirement that Brazilian regulation demands. It is a legal requirement. It is in Decree Law 73. For insurers, it is in the Complementary Law 109 for pension entities and so on. Here in Brazil, besides the solvency requirement, which is internationally demanded, we also require the coverage of technical provisions by guaranteeing assets. What are these guaranteeing assets? They are high-quality assets that are kept in a special account linked to Susep. So, for example, to cover the technical provisions, if to cover the technical provisions, the insurer buys government bonds or buys CDBs, or buy shares of investment funds, all these assets are recorded in a special account in the custody framework at the custody entity, and Susep has control over this daily. We know how much each insurer has in each asset every day. This is very important. And online monitoring is the foreign supervisors are envious of this control we have here in Brazil over the insurer's assets. And this provides us with a lot of peace of mind and needs to provide a lot of peace of mind for the market as well. This account is linked to Susep, usually due to operational difficulties. We have the insurers, they have a letter of free movement of these assets, but we can suspend this free movement at any time. So in our online monitoring, if there is any sudden change in any custody account, we immediately suspend the movement of that insurer until they explain the reason for that movement, what is happening. So it's quite a significant control to meet this legal requirement. So all the technical provisions belong to the Brazilian insurance market. And I'm not just talking about surety insurance. I'm talking about all areas of insurance. I'm talking about pensions. I'm talking about capitalizations as in these assets. Susep has full control over them. And I think it's very important for us to convey this reassurance in the sense that we have a very robust system that generates alerts for us. Online, in case of movement, in case of any sudden variation, and this requirement is quite important here in our country. As I mentioned, it is an additional requirement to what is demanded abroad, but we have a lot of confidence in our supervision scheme because we can rely on this legal prerogative.
Wonderful. So, in summary, I think it's very important to emphasize that our system is more conservative than international systems, and that our method of supervision allows for daily monitoring and custody of these assets and the suspension of their trading in case any movement is observed by Susep. And that, in other words, all the assets that are held by the insurers to assume the technical provisions, that is, to meet the responsibilities they have assumed, are under this regime of supervision, daily monitoring, and custody that you mentioned.
We are talking here about almost 2 trillion reais, equivalent to 15.5% of the national GDP.
Excellent point. So this was the second point brought up. And it is worth noting here that the first point, which is the relationship between the PLA and the minimum required capital, and the second point, which concerns the relationship between the guaranteeing assets and the technical provisions, are presented by the PGFN as impediments to the presentation of guarantees or renewal of policies if there is no solvency regularization plan or a plan for regularizing the necessary coverage sufficiency. In progress. That's good. I think we're going to enter it in the fourth item. Let's just move to the next item, which would be the adjustments in the accounting and or prudential reports required by Susep and not yet completed, considering the deadline established by the authority.
What else can happen? The company's equity representation is done in accounting through the balance sheet or the income statement, cash flow statement, various mandatory accounting statements. And the company, depending on the segment, makes a semi-annual publication or makes an annual publication. If it's a publicly traded company, it does it quarterly to also comply with CVM regulations. However, monthly, the accounting trial balance, accounting statement, the company's equity position at the end of the month is sent to Susep. So considering either the monthly, quarterly, semi-annual, or annual information, Susep can, either in the context of monitoring or in the context of inspection, verify that a certain asset is overvalued or a certain liability is overvalued or the liability is underestimated. Thus, Susep can determine adjustments in the accounting in the sense of reducing the asset for a certain reason or increasing the liability for a certain reason. For instance, so for example, in the area of provisions, if it finds that a company has constituted the provision, but according to Susep's view, that constitution is incorrect, it is lower, Susep determines an accounting adjustment. If, for example, it is verified that a certain asset is unrecoverable or has some other type of defect, that asset needs, for example, to be reduced to the recoverable value. To recover, an impairment needs to be done. So Susep can determine the reduction of that asset, and then it will be stated in the certificate the situation in which Susep makes this determination and the company does not comply. As long as it does not make the adjustment, it is notified. Why does it need to be notified? Because the financial situation of that company, in Susep's view, is not the one that has been disclosed. It is different. Either the liability should be greater or the asset should be smaller. This also reflects on the equity on the PLA. So it is important to have this disclosure so that it is known that the accounting information being disclosed is not the best possible in Susep's view.
And that would put principals items 1 and 2 at risk, right?
Exactly.
Depending on the effect generated by the adjustment that Susep considers correct, or the adjusted equity could be readjusted.
Exactly. Or the capital itself.
Capital required.
Or the profession or the guaranteed asset. Exactly.
The 4 elements that could trigger the pointing out of items 1 and 2.
Exactly. But these adjustments can apply to, for example, an intangible asset account that doesn't count for the purposes of provision coverage or doesn't count for the purposes of covering the minimum required capital. It can happen that there is an adjustment of this nature as well. So Susep conducts the accounting verification broadly, logically prioritizing or focusing on what affects solvency indicators, but it is not limited to that.
That's great. The 4th item, and then yes, is the solvency regularization plan. We have 2 items related to it. One is when it is in progress. The other is when it is not being complied with. So it would be the 4th item, the solvency regularization plan in progress, and the 6th item, the non-compliant solvency regularization plan.
That's right.
So I think it would be interesting to talk a little about the solvency regularization plan.
The solvency regularization plan is requested from the company when it is found that the adjusted net equity of the PLA is insufficient in view of the minimum required capital of the CMR. If this occurs in the months of December or June, which are generally the months when there is the verification of the balance sheet by the independent audit, and there is greater assurance about the quality of that number, about the quality of that information, or when it occurs according to the monthly statements that Susep receives for 3 consecutive months, then the plan is requested. When the plan is requested, the company has a deadline to present the plan. It is a 45-day deadline, and it has to offer, for Susep, it proposed to Susep a period of up to 18 months for adjustment, right? And generally, the regularizations do not take all that time. Very rarely it took 18 months. Usually it is resolved. Many times it is resolved in a month. Often it was a specific situation and it is already resolved. The issue of capital already makes a contribution, something of that nature, or the number is rectified. It can also happen that there is some information that doesn't, an operational error, and that there is an incorrect forwarding of the information, but this is usually resolved in 3 months, 6 months, up to a year. So the plan is for that. So when you have a plan in progress, it is when the company has presented a solvency regularization plan, Susep accepted the plan, it is with the plan in progress. The plan not fulfilled, the plan, depending on its size, its duration, it has some intermediate goals. So non-compliance can occur if these goals are not being met or when it reaches the end of the plan. And the solvency situation was not reversed. And then the situation of a non-compliant plan is already a more serious situation. It is also reported in the certificate. So one thing is to have the plan in progress, so the plan is following. Within that proposal, which was made and evaluated by Susep, it was made by the supervised entity and evaluated by Susep. Or you can have the situation of a non-compliant plan, which is a more serious situation where the solvency situation did not improve and the offered plan did not work out.
And would the non-compliant plan be the final milestone, or would the intermediate milestones also generate it?
The intermediate milestones can also generate a non-compliant plan. And then there can be other consequences. We can trigger other supervisory instruments depending on the case, and eventually even a special regime.
Depending on the significance of the point that is being non-compliant.
Exactly.
Non-compliance. And then ultimately, could it perhaps enter a special regime even without having a capital shortfall greater than 70%?
Depending on the situation, that's how it is. Dealing with a company in crisis, right? I think we in the Prudential Supervision Directorate kind of specialize in supervising companies in crisis, dealing with companies in crisis. It's very complicated because you don't have a ready-made recipe to deal with the different situations that arise. Many times you have a situation that it appears to be temporary. Many times you have managers who have a strong grasp of the situation and can, in many cases, anticipate with confidence the company's recovery over time. Sometimes you have a situation where external events hinder the recovery or not, and potential challenges. There is full control over the operation because eventually the portfolio is a recent one, the risk portfolio. So, the response that the supervisor gives varies, depending on the case. That's why we conduct an analysis of the various alternative possibilities, from the simplest preventive measures to the most severe measure, which is liquidation. And we always strive to act with proportionality and reasonableness, looking at the specific case, trying to evaluate all possible variables and adopting that measure or a combination of different measures that prove to be appropriate in the specific case, this up until now. These concepts were included in Decree Law 73 with the advent of Complementary Law 213, bringing them to the legal level. Isn't it? All these precepts, these prescriptions that exist in the guidelines, in the international principles, and that Susep already practiced in a way by virtue of sublegal regulation, and through practice or through the experience of supervisory action. Now, the law also gives us more comfort and also legal security for the entire market regarding these possibilities that society can adopt when faced, for example, with a situation of a breached plan.
Excellent. And the interpretation and handling of the practical case has been shown to be efficient. Exactly. I think we already mentioned that the number of supervised entities that entered, no supervised entity has entered a special regime in the last 9 years. I think this is the result of this conduct. Analysis of the specific case in decision-making and in the condition of the case. So the next item would be the 5th, which would discuss the Onde Podisas ongoing coverage sufficiency regularization plan. And the 7th would be the plan for regularizing insufficient coverage.
Yes, the PRC, the Coverage Sufficiency Regularization Plan, it is quite, the name itself says it, right? So when those guaranteeing assets, which I mentioned that the CP has the very intensive control over the assets, they are not sufficient to cover the provisions. We see this situation with great concern. It would be a situation where if the company closed at that moment, it would not have the assets, it would have a shortfall, it would not have the assets sufficient to meet the obligations it has assumed in the market, insurance. This is very important to us.
We are not talking about a scenario of materialization, inherent risk in insurance operation. We are talking about meeting the obligations already assumed by the company.
Exactly. Those already assumed and priced, and that, so in the cover, are represented there in the balance sheet, in the liabilities as technical provisions. So this situation is very urgent for us. It is very important, which is why this plan has a maximum period of 6 months to be executed. So when the company reaches this stage, our alert is at its highest. And we demand the reconstitution within a maximum of 6 months. The deadlines are also shorter to deal with the coverage of technical provisions. And in the same way, it is a situation of a plan in progress when it is within this 6-month period in which it is executing the plan or it may be breached. There are also intermediate milestones, or at the final milestone, if there is a breach, it will also be noted in the certificate. But then the situation for us is all ready, because usually the company enters this situation when it also does not have sufficient guarantee assets, when it does not have the adjusted net equity to meet the minimum required capital. It is a situation that already appears more serious, that of the technical provisions. But we also haven't seen this in our market for a long time.
Wonderful. Item 8, the note number 8, non-presentation or incomplete presentation of the periodic information form, the PF, or the financial statements in accordance with the applicable legislation.
Yes, this is an important note, because if this situation occurs, it makes they will perfectly understand what we talked about in the other segment. Completely hinders our remote monitoring. So this is very important for us. It's already, but we have few difficulties regarding this. The companies understand perfectly. We know there is a regulatory cost, there is a supervision cost embedded in this, but it is very important that the supervisor has this information on a monthly basis from the PF so that we can adequately monitor the provisions, also of the assets, the capital, and the statement itself, the accounting balance sheet, and the financial statements. It is actually a lack on the part of the supervised entity, the company with society, because the financial statement needs to be published in a widely circulated newspaper. Nowadays, it is also available on the Susep website for everyone to see. So it is also very important that this accountability in our market, which is founded on the principle of good faith, it is very important that the reinsurer, the broker, the policyholder, the insured, the interested party, that all stakeholders are aware, have knowledge of the company's statement, what it has to say, what the management letter is, what the numbers are, what the future outlook is, what are the most relevant explanatory notes, what are the contingencies, off-balance sheet items that are recorded in notes. In short, I think this is very important. This is even part of fulfilling the company's social function.
Certainly. The next point is the process for rectifying non-compliance issues.
That's right. The process for rectifying issues is a procedure. It's a process aimed at correcting any flaw that the supervisor believes needs to be corrected. So, então, is related to some irregularity that needs to be stopped, that can no longer continue happening. It may be related to some deficiency in internal control. It may be related to some flaw in the risk management structure, some flaw in governance. So it doesn't necessarily involve an infraction type, but these are situations which are generally referred to as issues, where the supervisor allows the company to correct it. And if the company refuses to correct it, then indeed it incurs an irregularity. So when it has a process of addressing issues, it also presents the action plan. And if at the end of the action plan the original situation has not been corrected, then the plan is considered unfulfilled.
The issues, the adjustments required in item 3, in issue 3, which would be accounting or prudential, are not halted by this issue, right? Here they would be risk management, aspects that are not the adjustments requested by the authority, accounting and prudential, which would be supported by issue number 3.
It's like this. The process is an instrument, the process is a means. It can be the vehicle for the accounting adjustment, but the accounting adjustment generally doesn't set a deadline. It can happen that it's a series of adjustments or that Susep itself couldn't measure the adjustment. So when that happens, the process of correcting issues can be used, saying, look, conduct here an evaluation of this series of assets here or this accounting account and present it to me so that we can see if this value is indeed correct or not. So this instrument can be used for that purpose. But generally, the accounting adjustment is calculated and determined by Susep itself, and it's not necessary to use the correction process.
Because you don't want to generate an action plan, you want to generate an immediate correction.
Yes, an immediate correction. It can happen. So as we foresee many possibilities, it can happen. For example, the company is having system issues. This system generates incorrect accounting information, right? So it would require an adjustment, but to correct the accounting information, you first need to fix the system. Do you understand? So generally, it's used like this. Look, make the necessary correction in the system. Once the system is corrected, you will correct the accounting information. Do you understand? Generally, it has this corrective function.
I understand.
Okay?
Point 10 would be regarding the unsupportability of authorization to freely move the portfolio of securities and real estate values, data in coverage of technical provisions, right, that we were talking about.
Yes, exactly.
The guarantee assets imposed.
Exactly. The guarantee assets, they are in an account that belongs to the supervised entity, but is linked to Susep. Normally, Susep issues a letter of free movement. And then, when an event occurs that prompts Susep to suspend the letter, it requests control over these assets. And it is also noted in the certificate so that everyone is aware that this situation is occurring.
Item 11 is the preventive prudential measure or the current precautionary measure that is not being complied with. And here, item 11, it is prohibitive for the presentation of guarantees or for the renewal of guarantees already presented.
This is prohibitive. And here we have two very distinct situations that may seem similar, but they are different. The preventive prudential measure can be adopted by the supervisor, as the name itself suggests, in a preventive manner. So when you have a situation with a certain company, that the supervisor understands that if it adopts a certain measure, it will preserve solvency, it will preserve prudence, you can determine a measure. And if it is not complied with, it results in a warning. So I can give an example here. A company that may be experiencing a deteriorating economic financial situation, and Susep can determine that it does not pay dividends, or that it does not pay interest on equity, or that it does not adjust the salaries of the administrators. This is a preventive measure. It aims to preserve the company's cash flow. Yes. Now, the precautionary measure is necessarily linked to an infraction, to an irregularity. It is provided for in Resolution 393, and it is also now included at the legal level in Complementary Law 213. So, when the company is in a situation of irregularity, Susep can, even before the initiation of the sanctioning process or during the instruction phase, determine a precautionary measure. It is similar to judicial precautionary measures, which aim to preserve the useful outcome of the process. In the same way, Susep can take a precautionary measure. So it differs from preventive prudential because preventive prudential does not need, it is not linked to an irregularity.
A breached preventive prudential generates a note. The preventive prudential, the measure, preventive by itself, it does not generate.
It does not generate a note.
It does not become public knowledge if the company...
It's because as it is still preventive, the situation has not yet, that harmful situation, it has not occurred yet. If there is no other situation listed among these, then that's why it is not reported. Now, the precautionary measure, it already, when it generally, the precautionary measure, no, generally not. The precautionary measure, it is necessarily linked to an irregularity. to an administrative infraction, and it has this requirement of precautionarity, right? Of the danger of harm, of the danger of delay, and that's why Susep can determine or impose the precautionary or interim measure. But in this case, if it is not complied with, if it is determined and not complied with, it is also a reason for notation. Exactly.
The notation number 12, initiation of special supervision arising from what is provided in Article 89 of Decree Law 73 of 66. This was also a hindrance for the presentation and renewal of guarantees.
The special supervision, Article 89, it talks about the economic financial situation of the supervised entities, and it may be necessary to initiate special supervision. It is not yet a special supervision regime, but it is more intensive supervision aimed at investigating the company's numbers, any overvaluation of assets or undervaluation of liabilities, with a special team, with a reinforced team. And this fact, it denotes a notation in the certificate because the risk level of this company is higher. We have already had, and not long ago, special supervision, which was later lifted. The SCP initiated the special supervision, carried out its work, and after the appropriate time, ended the special supervision, and the company continues to operate normally, much better than before.
And then a question arises, if the initiation of special supervision is temporary, will the insurer be prevented from issuing new guarantees? Can it speed up the process of the difficulties it has been facing? Ultimately, if it's a monoline insurer that operates exclusively with surety insurance.
That's why I told you that each case is unique and we think and reflect a lot before taking action. In this case, Susep issued the certificate understanding that this was useful information for society to know. Now, the fact that the PGFN has regulated and placed this as a hindrance to contracting, in a situation like this, it is considered when deciding whether to initiate special supervision or not, to establish another regime or adopt an alternative measure or a combination of other measures. Obviously, the goal is the preservation of the company. The goal is the recovery. It is the preservation of the company. And the principle of company preservation states that a viable company needs to be preserved and an unviable one needs to exit the market as soon as possible. As soon as possible, exactly. So even based on this principle, if a situation arises with a monoline entity actually still in the preventive or corrective phase, we can even adopt a measure to encourage or require it to operate in other areas, if it reaches a situation like this, to diversify its risk. So, as I said, each crisis is a story.
It has to be conducted in a very
different,
careful manner.
Exactly. And then we have relied heavily on the understanding and comprehension of the administrators and shareholders, especially the controlling ones, in steering through this moment. So when we say we are 9 years without any special regime event, we indeed are. But there have been many conversations with many people in many cases and an understanding through which the market itself has resolved its problems. Yes. The
13th point available in the circular is the establishment of a fiscal management regime or intervention.
Yes. And then these are indeed special regimes. In the fiscal management regime, Susep appoints a fiscal director who, together with the company's management, starts to take part in the company's decisions and begins to control the company's cash flow. Generally, fiscal management is a measure adopted when some waste in the use of the company's resources is noticed. So the fiscal director gains financial control and also obtains veto power over the company's decisions. Thus, it is a regime that can be established according to specific regulations, but in this case, Susep adds an administrator, a kind of administrator with oversight power for the company's management.
In your experience, does fiscal management or intervention occur temporarily within a recovery process? Or are they already more delicate situations that have already...
Well, for a long time. And so just to talk about the intervention before I answer your question. In the intervention, Susep appoints an intervenor or an intervening company, removing the entire management of the company. And then this intervention, let's say this appointed person, whether individual or corporate, takes over the actual management, complete control of the company. So it's a regime, a step beyond, let's say, state intervention in the operation of a private market company. The great challenge of establishing the special regime is precisely this: the possibility of reversing that unfavorable economic financial situation. So that we reflect a lot on whether we might eventually need to adopt a regime of fiscal management or intervention if it is considered more appropriate. That Susep adopts, let's say, standards or measures or actions that in fact can lead to the recovery of the company and ensure proper communication with the market. Handle the situation to achieve the goal, which would be the goal of continuity. It is not the history is not very favorable to this situation, but it is a more distant history in time, yet we reflect a lot, discuss a lot. And there is even consideration of making some regulatory adjustments so that if eventually it becomes necessary to adopt this measure, it will lead to the desired result next time.
Yes. And with so many preventive measures, it becomes increasingly unlikely to reach this scenario, right?
Exactly.
The point number 14, non-payment of the supervision fee. I think it's quite straightforward, right?
So even, tax related, the fee is a tax, and I also think that society needs to know when there is a default on the tax. Well, it's important to say that the revenue from the supervision fee is not allocated to Susep. It goes to the treasury. It belongs to the general budget of the union. So the collection of the fee does not benefit Susep directly. It is, in fact, an asset of the national treasury.
Very clear. And the last point, number 15, is the failure to submit documentation regarding general assemblies and the appointment of administrators.
Yes, this is an important registration issue as well. Today, there is a 30-day deadline from the moment the Corporate Act is carried out for the company to present it to Susep. Why? Because Susep needs to approve or ratify this act so that, in fact, the company's business registration with the commercial board is updated. And for example, changing the company's headquarters address, the name and qualification of the administrators or the company's capital level cannot remain outdated with the supervisor. We need this information to be as up to date as possible. That's why if eventually, if the act is not presented within the due time, we make a note of it.
Even the licensing certificate will become outdated.
Yes, then it loses its function.
Yeah, exactly. So that's great. Thank you very much, Carlos. It was extremely relevant to bring a bit more color, a very well-written note, but to bring more color and your experience. For each of the notes, excellent work by Susep in bringing this transparency to the market and especially to the insured. I think that the PGFN was a great example of the usefulness of this circular, how it is making use of this information. more detailed information to make its decisions regarding the acceptance of guarantees. Thank you once again for your presence. And we conclude. Here the summary of the notes. I will display on the screen once again the QR code for you to request access to the manual published by Susep. And we'll see you in the next episode.